Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully all of you had a very nice weekend so far. Now, keep in mind that all of these options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that I like to run on the channel. It's a very easy strategy to run whether you're a beginner, intermediate, or even advanced investor. It's a very high win rate strategy as well, usually with a 90+% win rate percentage, and very passive as well. Does not require you to sit in front of the charts for 8 hours a day. My performance with the strategy publicly on the channel has been quite good in the last 2 years that I've been showcasing this one since pretty much starting the YouTube channel. Here's a video of me, a younger me about a year ago, with a 75% annualized ROI at the end of 2023. And overall in 2024, we had a very good year. Unfortunately, you can go back in the videos and check, but I only have the 1 year rolling performance, and you can see we're pretty much up about 60%. Back when we closed the year, roughly, I mean, the month of January is not there, so year over year is not exact, but it was about 65% for the month of, or for the year of 2024 as well. So very easy strategy to run, and provided you respect the rules, it is a strategy that does outperform the market. So in today's video, guys, a few things to take care of. Number one, we're going to be going over the expectation for the week. We know it's going to be a very big week for earnings, and we have Jerome Powell. So we'll take a look at the technicals on the SPY, the QQQ, identify possible pullback locations, and just give an overview of the week, what we can expect, and what might move the markets. Thereafter, we're going to take a look at a few of the strategy rules. I'll be going through them very, very quickly this time around. And thereafter, guys, of course, we're going to go through the top 5 options plays of the week. And I do have some bonus plays for you, but a lot of the bonus plays this week, guys, are going to be for companies that have earnings, but we're going to be looking at how to play them either before, if you're risky, if you like risk, or after the earnings results, if the companies drop. I'll give you my 2 preferred strategies for either one of those 2 scenarios. So a decent amount to cover in today's video, guys. I'll try to keep it as short as possible. So let's jump right into the action, shall we? So in terms of the expectation for the week, well, we know, guys, it's going to be a very, very large week for 2 specific reasons. Number one, we have a Fed meeting on the Wednesday session, which is going to most likely result in a Fed pause of the interest rate cutting cycle. The probabilities for that are about 99.5%. So suffice to say, the market has already priced in the pause as of recently. However, the main point is going to be the commentary from Jerome Powell. We know that in the month of December, Jerome Powell hit us with a -3.5% day on the indexes, and that was because of the tone in relation to the inflation forecasts in relation as well with potential Trump tariffs. So we're going to have to pay special attention to his tone in terms of the direction of the interest rates. You can see here that for the September projection, we were at 3.4 for the end of 2025, which meant we were expecting 4 interest rate cuts this year. The Fed revised that in December to only 2 interest rate cuts with a terminal rate this year of 3.9. So we're going to have to pay special attention to any commentary on the direction of rates. How bullish is he? How bearish is he in the overall markets? And also in relation to inflation. The Federal Reserve changed a couple things in the December meeting, and one of the projection changes was the inflation projections, PCE and core PCE. That was revised to the upside from 2.2 on core to 2.5, and the headline PCE from 2.1 to 2.5. So suffice to say, guys, any and all movements in the market this week from Jerome Powell will be a byproduct of his stance on the direction of inflation and also his stance on the direction of the interest rate decisions. So keep that in mind. Other than that, we also have GDP coming in on the Thursday session. So these, Jerome Powell, GDP, and the Friday release, which is the inflation, the PCE, actually, these 3 results are going to have a material impact on the market. Now, couple that with all the earnings we have this week, guys, and every major sector is going to be having some very large earnings. First off, on the Wednesday session, arguably the biggest day starting off the week, ASML, Tesla, Meta, Microsoft, all going to move the market respectively. Lam Research for semiconductors as well. So tech and semiconductors will move quite big this week, mark my words. Thursday session, Apple, MasterCard, Intel, Visa, UPS as well. So you can see here, guys, a lot of tech names over the course of this week, and that will set the tone. And since all of these companies have very large weights in their respective indexes, they will move the markets a lot. So this week is going to be a case of be more safe than not, guys, especially on a very large week of earnings such as this one. And we have Jerome Powell and some volatility catalysts for macro news events. Not the time to be going extra greedy. If anything, it's a time to be patient and very calculated in our trades. In terms of the technicals, though, the SPY and the Qs have created a lot of space off the lows. Huge engulfing move. It was a daily downtrend. Now the big engulfing move. Any pullbacks will just be for a higher low. Anything above 575, looking for a higher low for possible further trend continuation. But if this week is bad with Powell and big tech earnings, and we go into some form of a daily downtrend, just understand the bulls have a lot of space on the weekly, same level. Weekly downtrend, looking for a weekly higher low for possible continuation. So I will be waiting for some pullbacks to buy the dips down here, and I will translate this into individual companies. If the SPY and the QQQ come down this much, we'll be looking for some deals on, potential players after their earnings cycle or before that are possibly at some very deep discounts. So keep that in mind. The pullbacks can be in order. 5, 6, 7, 8 days of rally in a row. It only takes one bad piece of news to start the daily consolidation trend for the SPY and the daily consolidation trend for the Qs and head us into lower levels where we are looking to buy. So do not get trapped up here on individual stocks when the indexes are high. When we are writing puts this week, we want to be going as low as possible on the companies that we choose to write the puts on. So hopefully that makes sense. That is your preview for the week. Now, in terms of the strategy rules, guys, I will fly through them this time. I know I say that every time, but now we're literally going to spend 3-4 minutes on them. I have a 30-minute video down in the description for the full explanation of the put wheel strategy overall. I will be redoing that video. It's about a year old at this point in time. I'm going to redo the video today or next weekend and have it out by pretty much next week at the latest. An updated version. I think I can make the video better. So I'll be redoing it. But in the meantime, guys, I'll go through these strategy rules very, very, very quickly. So the put wheel, what exactly is it? Well, writing puts, guys, the easiest way to conceptualize it is it is a buy limit order under the market that pays you whether or not it gets filled. Let me explain. Let's say you want to buy NVIDIA stock down here at about $135 because you want to buy the dip, but you're not too sure if the price is going to get there by the Friday session, but you still want to buy the shares if they do. Well, the easiest way to do that is we write a short put on NVIDIA stock at the 135 mark. That means that if NVIDIA stock closes below 135, we have to buy the shares. If it does not close above or below 135 by Friday, we do not have to buy the shares. What are we compensated for putting that buy limit order out there? We are compensated $71 in total or 71 cents per share. So if NVIDIA closes below 135, we collect 71 bucks and we add that to our average cost, or remove that from the average cost rather. And if it closes above 135, well, we don't have to buy any shares and we get to pocket this very juicy premium. It's a very easy way to just farm the markets, just placing buy limit orders under the market that pay you whether or not you get filled or not. But of course, you want to do this on stocks that you actually don't mind buying, right? So that is the gist of the strategy here, guys. Now, in terms of the strategy rules, number one, we want to build a watch list and filter for red. This will all make sense when I go through the rules very briefly. But in essence, every Monday, Tuesday, Wednesday morning, I'm filtering this list by red, and I only want to be targeting companies that are red on that day. I'll go through the rules and it'll make sense. Number one, high quality and high conviction companies only. It stands to argue if you're placing buy limit orders in the market for these companies using short puts, well, you might as well do it on companies you actually want to own. High conviction stocks only, guys. This is where a lot of people go wrong. They go chasing premium on stocks they don't really want. When they get assigned the shares, they start to panic because they realize maybe you didn't want the shares in the first place, so high quality companies only. Companies need to also be in a monthly uptrend or a long-term range. This just goes to put all the odds in our favor that the long-term bulls are behind us. Number three, no earnings this week. So I will be giving earnings plays at the end, but usually, guys, earnings is very volatile. You want to avoid them. You guys know it best, right? A stock can have very good numbers on earnings, but go down 5, 10, 15%. So if you want to avoid any outsized losses, do not write any puts on any companies leading into their earnings. It's just a recipe, guys, to end up with outsized losses, and you don't want to have to manage those thereafter. So don't do it if possible. Number four, we want to be targeting an area of support or a breakout retest. I'll do this very quickly. A large support area is something like an Autodesk where they've been range bound for 2 years. You want to target a large area of support, puts the odds in your favor of getting bounces from that location and not being assigned the shares. The breakout retest is, look at this range resistance highs. You get the breakout of the range, the retest of the high end of the range, resistance now becomes support for the bulls, the retest location, and usually then you get a little bit of a run. The retest area, usually a high probability trade. So all the trade setups you see me take are either going to be one of these two, a big support area or a breakout retest. This is also known as the trend continuation trade. Number 5, we're going to be looking at stocks that are at or lower than the expected move. If you guys don't know what the expected move of is for a stock in a given week, go to this website right here, barchart.com. Whatever stock you want to look at to get on this page, type it into Google. NVIDIA, bar chart, expected move. You'll come to this very beautiful page and you can see the expected move here is about 3.5% either way. We want to be targeting the lower end of this move. You see that number right there above me, 137.50. We want to be writing below that. Why? Because this is a probability Wall Street gives us for how much a stock can move in a given week. If we are always below that, usually if it does come below, it tends to revert towards the mean within this expected move throughout the week. So if it comes below in the early part of the week, it usually gives us a very good entry. Now, moving on further, we want to be writing on a red or flat day. Stands to argue if you want to be writing below the expected move, well, you want to be writing this on a red day. If NVIDIA on a Monday just skyrockets, we're not going to chase and we won't get any premium below the expected move. So we just go on to another play. So at or lower than the expected move only and only on red days. 0.5 to 0.75% in weekly premium. That is our ROI per week. Yes, you can write 2-week puts, 3-week puts, 4-week puts. I like the weeklies because they have the best ROI. But if you want to do 2, 3, 4 weeks, you can just multiply this. Let's say you want to do a 4-week put credit. Well, you can only obviously do this times 4, and that will be your average required ROI minimum. What do I mean by this? Very simple, guys. Go on the options chain. You need to see 0.5%. How do you derive 0.5%? It's very easy. Usually, you just want to do the amount of premium here, 0.71 divided by the strike. So 0.71 divided by the strike price here, you'll see it gives just over 0.5%, 0.0005. Now, if you want to do this in your head very easily, it's super simple, guys. No need to worry about deltas and everything like that. That's why I use the 0.5% rule, because it encompasses for the different IV across different stocks and across different chains. Just look for half of the strike price in cent increments. You can go through tons of options chains really quickly just using the 0.5% rule. Just look for 0.5%, while 0.5%, which is half of the strike price, half of 135 is roughly 68.70. So you know that you're getting the required premium right there. Very easy rule to allow you to go through tons of chains quickly. Lastly, we want to set a take profit order at 90% of the contract value. Just ensures, guys, that we're being capital efficient. If you're into the trade Monday or Tuesday morning, and by Tuesday afternoon or Wednesday, the stock is not, or the contract is 90% profitable for you, well, you may as well just take that profit off of the table and go shopping for a brand new play, just trying to stay capital efficient and not leave any dead money on the table for, 3, 4, 5 days remaining on in the week. And then if ever we get assigned, because these are buy limit orders, if ever we have to actually buy the stock, how do we get out of the stock? Well, glad you asked, guys. That's where we write covered calls. Covered calls is like a sell limit order above the market. We want to be writing covered calls at 0.5% to 1% in weekly premium. So if I get assigned on NVIDIA at 135 this week, I'll look to write the covered calls the following week for 135 and getting 0.5% to 1%. And I want to be writing at my assigned strike price or 1 strike higher. The only times you guys will see me write 1 strike higher is in the event that I get assigned on, let's say, NVIDIA by the Friday session at 135, and then the following Monday, it just gaps up to 140. Then I might write a little bit above my assigned strike, but for the most part, guys, you'll always see me writing at my assigned strike. So this is the last time that I will be going over these rules in the future, because I'll have a new, very detailed video. I will just be showing the list of rules, and then I'll refer you to the video. So this is the last time, because in the future, I want to keep videos under 20, 25 minutes and keep it majoritively for the trades. So it's been fun so far, but hopefully you guys have learned the strategy. If not, I said I'll be showing that large, detailed video that I will be remaking. But for now, there is the older version down in the description. So now for the top 5 options plays, guys. Let's get into the juicy stuff. So a little bit of a preface, right? The context of the week. And we know that there's going to be a ton of earnings and Jerome Powell. So it stands to argue we want to be playing stocks that stand to be the least affected either by Powell or by the rest of these corporate earnings, right? Which is not a very easy thing to do when you have so many different companies in so many different industries, right? Most of all of them can or will be affected, but we want to play the ones that stand the least to be affected. And also, there are several plays that are at very good levels. However, they have earnings coming up the following week, right? So I'll just give you a few of those, like Elf Beauty. I've been talking about it a lot. Elf Beauty, gorgeous level. I wouldn't mind writing puts down here. However, you don't want to be assigned this week because Elf Beauty has earnings the following week. The same thing for Chipotle. Chipotle is at a fantastic level to write short puts right now, but if you get assigned this week, you have to ride the shares into earnings Monday the 3rd of February. So we can't do those either. NVO, same thing. Gorgeous, attractive level down here in the lower 80s, but you don't want to be assigned this week because then you have to carry the shares into the uncertainty that is earnings on the 3rd of February. And lastly, even another one, a very solid company such as Honeywell. Honeywell, fantastic level to be writing some short puts. It is a massive monthly breakout, retest, and possibly run. The only problem is, well, if you get assigned, guys, they have earnings the very following week. So I can't give you any of those plays because if you get assigned, you'll have to hold the shares through earnings. So that removes already 4 very high quality companies that are at very attractive levels. But the problem is they have earnings the following week. So I can't really give you those. So here are the top 5 options plays that stand to be the least affected by earnings and that could represent some decent opportunities. The first one of which is going to be NVIDIA. So NVIDIA, yes, I know ASML and LRCX do have earnings this week, but I do believe that of all the semiconductor stocks, NVIDIA possibly stands to withhold the test of time the best. So the expected move this week for NVIDIA is 137.5. So we want to be looking below that, preferably closer to my support range, which is 130 to 125. So let's go shopping on NVIDIA, guys, and see what exactly we can find. Well, I already showed you the 0.5% rule is currently sitting at 135, which in all fairness is below the expected move, but I want to be getting better. I want to be getting lower because I'm going into ASML and Lam Research earnings. So that being said, if NVIDIA drops Monday and Tuesday, bringing us down 140, 139, 138, well, that is going to free up the strikes most recently on the 130 as close as possible to 130. So I do like NVIDIA this week, but I'm going to be patient and I want to get my desired level. I don't want to be playing it up here with earnings and Powell because it can drop if ever the markets do not like what happens this week. That is why I want to be playing it at the lower range of support, 130 to 125. So the strikes for me this week will indeed be those 132 max. 131, 30, 129 is going to be the better one. So 131 all the way down to 125, depending on the size of the moves down. I want to be getting all the way down here. Don't get too greedy with this one this week in the mid 130s, guys. Obviously, NVIDIA can just skyrocket and that would be fine, but we have to manage the risk first. So as a whole, play it more conservatively than not. We have to wait for these strikes to open up because right now they are not available. Only the 135 is available, which is fine for a long duration hold. But if we're looking to protect the risk as much as possible, you want to be going as low as possible on this chain. So just keep an eye if NVIDIA drops. You will want to see 0.5% here, which would be 65 cents. Just do it in your head, guys. 130 divided by 2, 65. So you need to see 65 cents here for the 0.5% rule. If you don't believe me, just do the math. 0.65 divided by 130. That is your 0.5% rule. Very easy rule to follow in your head. That is stock number 1. Now, special shout out to names such as Micron in the mid 90s. Not too bad of an idea, to say the least. And also special shout out to ARM, which is possibly going to retest this area in the mid 140s. Shout out to those names, but for this week specifically, I do think the best bet in terms of being the safest would perhaps be NVIDIA. Now, moving on to stocks number 2, this is going to be a combo of fintech plays. Number 1 is SoFi. Yes, but Will, SoFi has earnings Monday morning, and yes, indeed they do. SoFi has earnings Monday morning. However, the beautiful thing about that is that it is before the open. So we will have the SoFi price leading into the market open. Now, this play will only be live if SoFi comes back back after earnings. If SoFi moonshots after earnings, are we going to chase the stock to the upside? No, guys. The play on SoFi is going to be for a pullback after earnings. The expected move on this one is about 11% for the week, all the way down here at 16 because of earnings. Now, if they do pull back, this is a massive support range. Think of 16 all the way down to roughly $14. They did the breakout. Now they can retest it as support if they come down after earnings. So that being said, 15.92 is the expected move. If we come down after earnings into the 16s, even high 15s, if they really come down hard into here, it will open up the either 15 or maybe even the $14 strike for the week. At a first glance, these premiums will not make sense because earnings has not happened and all the volatility is currently still baked into the options chain. So I would love to show you the premiums right now, but these will not be true premiums because they are the premiums before earnings. So what we'll have to do is after earnings, if you can see roughly 0.5%, which would be anywhere between 7 to 10 cents on the 15 strikes, if we drop on SoFi and you can find 7 to 10 cents on the 15s, those are fine. If it drops too close to 15 though, well then you may want to revise that and go for the 14.5s or the 14s, as low as you can possibly go while still getting roughly 7 to 10 cents on the bid. That will be the play that I'm looking for on SoFi after earnings, only if they come down. Thereafter, Square, also a very beautiful fintech play. That is not Square, they changed their ticker. XYZ is the new ticker for Square, as a matter of fact. This one, the reason I like it, technicals, guys, it is once again a breakout retest, breaking out of the 2-year range of resistance, retesting this as support this time, and the valuation of the company is extremely, extremely cheap. At 90 bucks, you're talking about a 0.73 peg. That is ridiculously cheap when you consider all of this fantastic growth for the business over the next 2-3 years. That being said, we've now just been consolidating for a while now, and I like the lower 80s. So SoFi earnings, if they come down, could affect Square, PayPal, and the other fintech names in the space. For that reason, the expected move is 85.37, but I want to be going as low as possible in this range of support, right? Think 82, $80 if possible. So Square, if Square drops on the Monday morning as a result of overall market or from SoFi carry trade specifically, the expected move 85.37. Let us go shopping on Square and see, can we find any premium down below there, right? Down below the expected move of 85.37. So taking a look at the options chain right here, you will see that for the most part, well, the premiums here are a little bit weird because I guess they moved the options chain over, but you can see right here at $82 where I want them, there's not enough premium just yet. So what we need to see in essence is Square come down a little bit more. If they start retesting 87, 86, even 85 early on in the week, that will most likely free up the $82 strike as a whole. But as you can see right now, you know, they're not giving enough premium. Some of these strikes are a bit weird, but just take a look here. You'll find there's double strikes for some reason. The 0.5% rule right now is at 84. 84 is not a bad level, but I'd like to get a little bit cheaper. 83, 82, 81. So that's going to be the play on Square, as low as possible in the support zone. Love this company, great valuation, and I would not mind being assigned shares there, considering the support level and considering how cheap the company actually trades for right now. So that is plays number 2, the fintech plays. Play number 3 is one that I've been waiting for a while, guys, and it's finally starting to come alive, which is Airbnb. So you can see Airbnb breaking down from the level, challenging the resistance, 143 to 130, could not break it for the last roughly 3 months of trade. So we might be heading back to my favorite location for Airbnb, which is 120 down to about 110. That being said, at roughly 127 right now, the valuation is not the best, but not the worst either. If we come down into the 120 range, this valuation will come closer into a 1.7 peg. So in terms of the growth, the valuation is not the best, but in terms of the value proposition of the company, the free cash flow yield is actually amazing. So that's why I do want to play this one down here, 120 to about 110, and they are finally offering it up. This is a very large level for Airbnb, keep that in mind. The expected move for the week is 122.57, and lucky for us, Airbnb does not have earnings anytime soon. They only have earnings the third week of February, so we have quite some time before earnings, and no major company this week stands to really affect Airbnb overall. That being said, let's have a look. Can we find anything below 122.57? So let's pull up the options chain right here. and we'll do this together. So let's pull up Airbnb, and while that loads, give me a very brief moment. So now looking at Airbnb, you can see that below here at 122, well, lucky for us, there is actually 0.5%, right? The expected move 122.57, and at 122, we are getting 76 cents. That is 0.5%. You go one strike lower and you can see we are not getting 0.5% anymore. Half of 120 is roughly 60, of course. So you'll need to see at least 60 cents on the bid. That being said, if Airbnb continues declining, which it has a decent chance of doing, if we continue declining 125, 124, 123, Monday or Tuesday morning, that'll probably free up the 120 strikes or better. Think the 120 all the way down to maybe even 117. These are my preferred strikes for the week on Airbnb, and those are the ones that I'll be most keen on going shopping for. But this week, as I remind you, with Jerome Powell, with the big tech earnings and whatnot, we want to be patient, right? Don't settle for a 124 or a 123 or 122. Be patient. Let the stock come to you and open up the strikes we actually want, which is 120 down to 116, depending on the size of the move to the downside. That is company number 3. Companies number 4 are going to be a pair of value trades. Always like playing value, especially in this context where we don't really have many companies that can affect the course of these trades over this week, except maybe for Starbucks, and I'll show you why. So Coca-Cola has been one of the favorite ones that I've been saying on the channel for the past 2 months of trade. Playing short puts in this area, guys, has been a very juicy proposition because on the monthly time frame, Coca-Cola is just a massive monthly breakout retest, retesting roughly a year and a half worth of previous resistance, which is now support for the bulls. And usually when Coca-Cola comes down to the 50 EMA on the weekly, I mean, you can see, right? Other than COVID, it usually does a good job of holding up the 50 EMA. And we're coming right down into that now. That's roughly $60. So the whole time Coca-Cola is just hovering around down here, close to the 200 weekly EMA, which also it very rarely tests. Japanese carry trade, COVID, but other than that, Coca-Cola does a very good job of holding up this 200 weekly and the 50 EMA on the monthly. So that's why I still believe that this location for Coca-Cola, $60 is somewhat of a no-brainer, a very solid company. I think nobody is ever worried about holding Coca-Cola, so I like this one. It's a more defensive trade leading into the earnings week, and I don't think anybody should be upset if ever they get assigned any Coca-Cola shares. I know I would not definitely be upset. Moving on to Coca-Cola, let's have a look. The expected move for the week is 60.95. So let's call it about 61. The thing about Coca-Cola, though, is because it's so defensive, the volatility is not that high. So you really have to be on top of the stock price. Take a look here. Coca-Cola is right now trading 61.92. And you can see at the closest strike, 61, we're not even getting 0.5%, right? Only 24, 25 cents, which is under the 0.5% rule. You need to see about half of 60, which is 30. You want to see 30 cents here. So essentially what I'm saying is you do need to see a little bit more of a decline on Coca-Cola to open up that $61 strike. And if you want to trade the $60 strike, it stands to argue you need a hefty decline this week, Monday or Tuesday, to open up the $60 strike. But for me, if we're just looking to play the wheel on Coca-Cola, $60 is completely fine in my opinion. You just need to be a little bit patient, wait for a little bit of a dip to find 30 cents on the 61s, and it's a very solid trade. Number 2 part of the defensive stocks is McDonald's. I mean, McDonald's needs no introduction overall, and McDonald's, similar to Coca-Cola, guys, it's just a question of pattern trading, right? It's just solid company, such a defensive company. McDonald's really does well of weathering any storm that you throw at it. You know, other than the Japanese carry trade and COVID, the stock never really breaks below its 26 monthly EMA right here, as you can see. At least it has not really done that since 2015. And even then, right, it did hold it up pretty well. So that's why McDonald's in this location, monthly uptrend, looking for the higher lows for some possible trend expansion. No problems with the business whatsoever. Sweeping move down on the weekly, setting the weekly lows right there at about 278. So I like this one in this area of support, talking about 280 down to about 273. I think it's a relatively safe trade to be made on McDonald's, but similar to Coca-Cola, the premium is not that fantastic because it is such a defensive stock. It's not Palantir, it doesn't have that much volatility, but it is very safe. So that being said, the expected move for McDonald's this week is 280.95. Also doesn't really stand to be affected by these earnings, maybe other than Starbucks. But then again, you know, not that much of a carry trade in my opinion. So moving on to McDonald's, as you can see here, guys, If we're looking to target the expected move of 280, let's have a look here. At the 280s, you'll see not enough premium, right? Only about 86 cents. Half of 280 is 140, so you need to see $1.40 on this strike. Unfortunately, the $1.40 is on the next strike higher, 282. So what we would need to see from McDonald's this week, early this week, is a little bit of a dip and retest of the lower 280 levels. That, in my opinion, will free up the 280 strike, or depending on the move down, the size of the move down, it may even free up the 277.5s. So for me, it's one of these two strikes, 280 or 277.5. So keep that in mind. That is for Coca-Cola and for McDonald's. I know McDonald's is an expensive trade for most people, but that's why I give some are cheap, some are expensive, right? I give you the SoFi trade, that's a cheap one. Coca-Cola is a cheap one. Square is a relatively cheap one. But Nvidia, Airbnb, McDonald's, a little bit more expensive, but there's something for everyone. Moving on further, the last trade of the bunch is going to be a risky trade, which is BITX. So BITX arguably doesn't really stand to move much from any of these earnings, but does stand to move from Jerome Powell. That being said, I really like the Bitcoin setup right now. Just pure technical analysis version of this trade. Now, if you don't like Bitcoin, feel free not to take this. Anyways, none of this is financial advice. These are just trade ideas to give you guys some inspiration. That being said, Bitcoin is holding above its highs right here, above the resistance highs, which are now support, above the moving averages, which is 101 down to 98. We have a heck of a big cushion down to the actual support level, which is down here 91 to about 88, roughly 12% away. So when I'm looking to play BITX, which is a 2 times leverage bet, I want to play this one super conservatively, as close as possible to under 50. Why under 50? Well, because that would be synonymous with being under 90K on Bitcoin for the week, which would be a tremendously big move on Bitcoin for the week. So take a look at BITX. There's a few ways of playing this, and some of you play this one extremely aggressively, but I'm not looking to do that. I'm just looking to collect my 0.5% per week, and that's it. So take a look at the BITX expected move here. It's 56.26, but when we take a look at the chain, you'll see we can get, in all reality, a lot lower than that. So taking a look at this real quick, BITX, let me just go all the money right here. And BITX, you'll see that you can go all the way down here to the $50 strike, which for all intents and purposes on Bitcoin would mean a reduction here of about 22%. This is 2 times Bitcoin move. So that would mean Bitcoin would move 11%. And where's 11% on Bitcoin? Right down into our support level. So I don't mind buying Bitcoin here, but you do not need to play these strikes that are super close and get seduced by all of this very fat premium, guys. Do not get trapped by Wall Street. They're very juicy for a reason, because the risk of assignment is high. If we want to stay true to the strategy rules, you want to go risk off, right? You're playing a risky name, but with a very large margin of safety. So for me, it's the 50. If Bitcoin drops more, you'll even be able to get the mid 40s. I've been running this one, guys, for like the last 3 months. I've never been assigned one time just because I go play these super risk off, right? You can do the same thing with MSTR, sure, but the logic should be the same. MSTR, you should be targeting way down there and going for 0.5%. Do not get too greedy, guys. You know what happens. Maybe you've been trapped on this one before, and it's not fun being trapped at a poor level, is it? So be cautious with these Bitcoin related trades, guys. It goes for all of them. Coinbase, MSTR, whatever you're playing, BITX, right? The miners, Mara, Riot, just be careful. I know the premium looks very nice, very close to the strike, but it's for a reason. They move a ton, and if you get assigned and get a poor level, guys, sometimes it makes the trade a little bit anxiety inducing. So if you want to stay away from that, just play it in a conservative manner if you play it at all. That is everything for the top 5 options plays. Now, in terms of the bonus plays, this week for something different, I will show you my earning strategy. I have not shown this one since last quarter, but now that we're embarking into the big bulk of the earnings season, I will show you how to play earnings 2 different ways. Number 1 is going to be for all of you risky people out there, and I do this sometimes as well, all of you who want to play these companies before earnings and take your chances with it. This is how I do it. It is called the 2 times expected move strategy. What do I mean by that? So let's take, for example, I know not all of you have the money to play these necessarily, but we're going to use these as a theoretical example, right? So let's take, for example, Tesla. Let's say you want to play Tesla with some short puts leading into earnings. We are going to use what we call the 2 times the expected move strategy. What does that mean? You go to Tesla. Number one, you are going to do this before earnings, right before earnings. So if the company you want to do this on has earnings Wednesday morning, you do this Tuesday right before the close because you want to know what the final price is going to be and the final expected move. If you're looking at Tesla after the close on Wednesday, you want to be doing these on Wednesday afternoon, 3 p.m. So you get the final price, the final expected move. Hopefully that makes sense, okay? So let's say we're looking for Tesla, and let's say, because we're looking Wednesday before the close, let's say that these prices are Wednesday before the close, because obviously there's 3 days until now, so I can't give you guys the final price, but just for the example, follow me along, right? So here's the expected move, 8% on Tesla up or down. We want to multiply that number by 2. We'll be looking 16%. It is 2 times the expected move, also otherwise known as the unexpected move, right? Usually they don't move 2 times more than the expected move. They can, but 95% of the time, usually they do not. So 8% would be down here, 371. 2 times that would be all the way down here around 340, 335. So we will go on the options chain and we will be looking for the 335 short puts on Tesla leading into earnings, okay? We play these ones very safe, guys. If you want another example, right? We can use another example prior to earnings, let's say. So let's say we look for, I don't know, let's say we want to play LRCX, Lam Research, right? So let's go. And you also want to combine this with a large area of support. So if the 2 times expected move takes you into support range, that is good. You want to still have a weekly support level. Let me show you on LRCX. We'll do this one more example here for LRCX, and then we're done. So LRCX, let's take a look at the expected move. This is a semiconductor play, of course. So LRCX, let's look at the expected move, okay? So the expected move here on this stock is roughly 6.3%. So 2 times that would be 12.5%. So you go on the chart right here, and then you measure 12.5% to the downside, right? 12.5% to the downside would be all the way down here, $69.70. Does that put us in a very big level of support? Well, indeed, yes, it does. A very large area of support, as you can see, $70 to $69. So then you would go on the options chain here on LRCX, and you would look for the premium available on that chain. Now, the next question you should be having is, are we looking for 0.5%? No, you are not looking for 0.5% since you are so far away. What you will be looking for, guys, is what we call the 30% annualized ROI rule. I don't know why I've just vanished here. Let me just put this back. All the moneyness here. So we'll be looking for what we call a 30% annualized. Follow the math, guys. I'll do it once for you, and then you guys can do it on your own, okay? So you can see here at the $70 strike, there is not 0.5%. 0.5% would be 35 cents. It's not there yet, nor is it on the 69s. If you want to know if you're paying yourself enough, go for 30% annualized. I'll show you how to do this, okay? You take the premium, divide, let's say we take 70, divide 0.28, which is your premium, divided by 70, okay, times 365. This is to annualize the rate of your ROI, times 365. Then you divide it by the amount of days to expiry after earnings. So LRCX has their earnings Wednesday after the close. There is 2 full days until Friday. So we divide this by 2. Okay, if there would be 3 days, it would be 3. If there would be 4 days, it would be 4. But in this case, it's 2. And as you can see, that is a 73% annualized ROI. Well above the required minimum of 30%. So you want to see 30%. So I'll go to show you guys, you can get very low on these and still get your minimum ROI. Look at the 68s. The 68s are trading for roughly, let's call it 19 cents last traded price, right? So 0.19 divided by 68, right? Times 365 divided by 2 days to expiry, you're getting 51%. So you can see you can go low and still get the very juicy 30% annualized ROI, guys. It may not seem like a lot of money, but 30% annualized ROI is 30% annualized ROI. That's 3 times the average S&P, right? That is strategy number 1. I call it the 2 times expected move, but I only do this on high conviction companies only. I'm not playing every single company on this list, guys. No. You only play it on companies that you feel confident enough in playing this strategy in. Don't start doing this on every single company, guys. You're going to get into some companies that you don't know very well, and if their earnings miss in a big way and you end up taking a big loss, you'll never do it again. So only do this on high conviction, high quality companies. Please, please, please. If you do it at all, I'd never recommend anybody to play earnings, guys. You guys have seen me do it in the past, and even myself with this strategy, even I have gotten upset with big losses. Last year, CRM, Nike, Starbucks, they went more than 2 times the expected move, and it can result in a large loss if you don't know how to manage the position and close the loss very early, guys. So be careful with this strategy. It's risky for a reason, right? I'm playing it the safest way possible, but I would be lying to you if I said that it's a sure bet. It is still risky, so keep that in mind. Strategy number 2 is waiting for earnings, and this is going to be a very easy one, guys. All you have to do is wait for earnings. And let's say LRCX has a big dip after earnings coming down into here, into the support level. Well, then you just look for the following week, because the morning after earnings, volatility will still be high for the first 15, 30 minutes of the open. So what you're going to do is, let's say you want to play LRCX, but you don't want to play it before earnings. You want to play it after earnings, and then LRCX after earnings, well, whoops, they come down, and they come down into the $70 range. Perfect. Then you look as low as possible. However, not for this week, because there will be no more time left on this week. You will look at it for the following Friday thereafter. This is what I'm going to do, guys, for most of the big tech plays. I have a larger account size, so I can afford to play Tesla. I'm going to wait for Tesla after earnings. I'll use TSLL, 2 times leverage Tesla. If Tesla comes down in a very big way, I'll be looking to write for the following week all the way down here. Very, very conservative. Same thing for Microsoft, right? If Microsoft drops after earnings and comes down into this location again, 415, I will be looking for the following week, 410 down to about 405 into support, right? That's a very easy one. We wait for earnings. Then the day after earnings, we look for 0.5% on the strike, as low as we can possibly get for the following week. Because obviously, guys, I won't be here making a video like this throughout the week, right? So if we have some nice dips on some of your favorite companies after earnings, it could be a very decent time in the first 15 to 30 minutes after the open, when the post earnings volatility is still high, to go shopping and lock in some of those juicy levels. So that is everything I had for this week's video, guys. Hopefully you enjoyed that. As I said, please be careful if you are playing these stocks before earnings. Keep it to companies you know very well and that you have high conviction in. I do not want to see you guys playing 5,000 companies on this list, guys. Trust me, it is not worth it. It may seem easy, it may seem profitable, but it only takes one play to put you upside down, like what happened on CRM last year, right? For no good reason, when they dropped the stock 3 standard deviations, right? You know, from 270 all the way down to 212 for no reason at all, right? It just takes one of those or one of the Nike trades that you're confident in. This 3 standard deviation move. Starbucks last year, this 3 standard deviation move. So it can go more than 2 times the expected move. So that's why I say, if you are playing these, you may as well play them on companies that you know well, and that, you know, you're not going to have a massive, massive, massive surprise thereafter for some company that's pricing in a 10% expected move and goes down 30 to 40, right? You see these all the time on companies like IONQ, some of the riskier ones, guys. I would stay away, right? Because they move way, way, way too much. And if these guys miss their earnings, they're down 30, 40%, and you're underwater so much it'll make your head spin, right? So be very careful this week with earnings, guys. High quality companies only if possible. And that's it for me, guys. So hopefully you enjoyed today's video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We just hit 5,000 subscribers, guys. So thank you so much, each and every one of you. But if you like these videos, you may as well come back. So hit that subscribe button to know when I drop new videos. And also, guys, if you have any questions on the strategy, please feel free to leave them down below in the description. As I said, I'll be redoing my strategy video, should be dropping next weekend as a whole. And guys, if ever you want access to the private trading Discord that I host myself, these are all the trades since the inception of the Discord. Focus on the wheel trade sections, right? The directional trades are fine. Those are call options, call debit spreads, leap call options, shares. But if you look at the wheel trades, right, the way that I trade the wheel up here, very, very high win rate, as I've shown you the strategy so far, right? So these are all the trades. The green check boxes are wins. The little red dots are small losses. So if you see, this is the entire history of the Discord. I'm always transparent with my wins and my losses. So if you want to have access to all of these trades in real time, the link to the Discord is down below in the description. Everything, guys, the wheel strategy, call options, call debit spreads, put credit spreads, shares, long-term portfolio questions and allocations, every single option, every single strategy you can possibly think of, we do in the Discord. I also do private morning live streams Monday through Friday for about 2 hours every morning, where you see me trade live and where I answer all your questions about your stocks and your options in real time. You can also ask me in the chat rooms all day your questions on stocks and options. I share all of my watch lists in the Discord, all of these options lists, the other lists that I don't show that often, and all of the annotations, right? When you copy my charts, you get all of the chart annotations as well. So whenever I write down stuff for earnings, or I'm putting support and resistance zones or technical analysis, that all comes included in the Discord as well. We also do private videos, which I show some higher net worth strategies, some more aggressive strategies, call debit spread, put credit spread strategies that I do not show on YouTube. Some of the more advanced stuff that is also included in the Discord as well, and other features that I just don't have time to talk about right now, but so much more, guys. Really a lot of stuff in the Discord. So if any of that interests you, the link is always down below in the description. Hopefully to see you in there soon. And if not, well, I guess I'll see you back on the channel, guys. Take care. That's it for me. Have a great rest of your Sunday evening, and hope you guys crush the markets this week. Do not get too greedy. If you don't get too greedy, you'll probably have a very good week. So take care, ladies and gentlemen. That is it for me. Peace.